Hey guys, welcome to my channel. I'm a 700k funded trader, mentoring multiple students, helping them with passing challenges, prop firm payouts. And today's going to be a very interesting topic, right? We're going to be speaking about, psychology as well, having a positive relationship with your losses and how, and first of all, they're not even losses, right? I like to call them experience trades, and the better you want your relationship with losses better than your winning trades. And trust me when I say that. When you look at your losses, right, normally we're like, okay, I've lost one trade, I've lost my second trade, I've lost my third trade, it means I'm a loser. Well, all the negative emotions that come into play. The reason that's happening is because you don't have a plan, you don't have a roadmap, right? For example, even not just before you enter trades, right? What are you doing after your trades? After the outcome, are you journaling your positions? That's when you actually find out what you are exactly doing wrong, what your emotion triggers. What I've seen from experience when I speak to multiple of my students is uncertainty, right? And unexpected, when they don't expect the next outcome. And what I mean by that is, for example, you take a trade, right? Now you are just expecting to lose by price hitting your stop loss in the most common way, which is when price is just either moving up and down and it comes down, hits your stop loss. You're not and when you imagine suddenly news hits, right? And you just keep track of when news is gonna red fold, the news comes, boom, right, knocks you clean out, maybe slippage involved as well, and you lose. Maybe rather than 1%, you're expecting to lose 1%, you lose 2%, you lose 2.5% or 3%, right? Maybe the market gaps, you weren't expecting that. You just expect, normally when we hear, I won a trade or we lose a trade or someone else, we just think, yeah, market just went, normally into and hit the TP. We don't, sometimes TP might be hit, maybe a news comes out, we weren't expecting it, and it just flies into your position, right? And then we're like, oh, okay, yeah. And we, as a viewer, we might just think he won the trade because he thought he analyzed the charts and the market goes in that direction. But no, maybe it's just a fluke trade. It was a fluke winning trade, and because of news helped him, right? Vice versa, a bad trade doesn't always mean a bad trade. You might follow all your rules, and just because you lost that trade does not mean it was a bad trade. When we hear when we hear people saying we have a 50% win rate out of 10 trades or out of 100 trades, trust me when I say this, that metric is not worked out by you taking into account your C plus setups, your B plus. It's only your A plus setups. Take 10 of your A plus setups, right, or your 100 A plus setups, and then if you have a 50% win rate, that's how that metric is worked out. It's not by you randomly just take 10 trades and if you win 5 out of 10, like, no, your best possible trades, and then check out what your win rate is, right? And even if let's just quickly, by the way, if you're not, link will be in the video description if you want to join. If you have been struggling for years, link will be in the video description. Passing prop firm challenges. I myself just passed these most recent one. I passed 2 prop firm challenges both in one day. And I just focus on the skill, right? And I'm by far made probably the most affordable course on the internet. Well, maybe 700k funded, and due to high demand, and it's only not even 3 digits, so you can see that here. But it's a community where you can help each other, you can learn from each other, and you can ask me questions as well. So link will be in the video description. And you can even check out the videos where I'm catching these 1 to 22 risk to reward trades. I post my live trades, winning trades, losing trades, everything, right? It's all about transparency. So when we go over the break and retest, I'm going to be using gold for the example, right? I want to quickly go into this. I'm going to just minimize this so you don't get, okay, so just don't get you distracted. Now look at this, right? This is gold, right? Let's just see where gold could possibly go in the next on Monday, right? It's Sunday today, beautiful weather in the UK, so we got Monday coming up, and so let's see where, and I'm going to break this down why I've drawn these zones the way I have as well. Now this is my original chart color. Normally I've been drawing them red and green, but I'm just gonna go back to my original color, the way I draw my zones and my charts. Candlestick colors, normally the black for bearish candles, blue, light blue, whatever you want to call it, for bullish candles. So we got this zone here. Why multiple wick rejections? And you can use 1 hour time frame, 4 hours, whichever time frame. I'm going to be using the 1 hour for the example. So we got, you know, multiple rejections here. How do you identify a bullish or a bear, you know, a zone, support or resistance? We've got a bearish candle turns instantly bullish. That's your support. It's more simple way. You know, we've got a bullish candle here turns bearish instantly. You can say that's your resistance, but then you want to focus. You always start from the right side of the chart, move over to the left, right? So we've got one level here. Now this is obviously drawn from here, right? And we've got big rejections here. But if I was to refine this even more, ideally, let's just clean this up. Ideally, see, that makes it's more clear now. This I can just push further up. And also, let me just bring this a more slimmer version of this. Because remember what I said, wick rejections instantly turns bullish here. You got wick rejections here. That's your zone. Right, so where could gold possibly go? And even if let's just see why in the past what moves we could have taken advantage of. So let's put this here. Now we've got a bearish break to the downside. Normally I already have all these wing trades and all that marked up. Let's just take this a step back. Right, so you could have capitalized on this move. Well, first of all, look at this. If you're thinking why is this huge wick rejection here, well, it came back up to test this area again. Why? Because this is a zone, right? Look, this bearish candle turns bullish instantly. It is a zone. If I go to the smaller time frame, let's take it a step further back. I mean, look at this. And this is why I have this candle strength. I mean, now I don't have to use the indicator anymore. But look at this. A super strong 99% super strong bearish candle. After this candle forms, all you have to do is take a bearish trade. A sell trade. So on gold, after the candle forms, you can just pretty much, you always want to wait, by the way, for the candle to retrace a little bit. Don't just take the trade instantly from here. Take it pretty much from here. Ideally you can have it, you know, above this zone. Even safer, you can have it above the wick, but then, you know, normally you want to work out and see, you know, which how much breathing room you have, alongside how much risk to reward, like how much reward you can get out of the trade as well. Now, why did this trade play out so perfectly, right? Well, we had this, obviously price was moving sideways, and then, you know, we've got this double top pattern here. Price market tanks, breaks this structure here. Oh, let me just bring this back. And we've got a huge downward shift as well, right? We've got a shift to the downside. Now we've got this shift to the downside. You know, look at this bearish candle here. Look at the volume of this bearish candle. Huge bearish candle. Starting to get a little mini trend to the downside. We've broken structure, indicating a more, you know, push to the downside. And then what happens, right? Price continues pushing to the downside. That's how you can get these huge moves. Capitalize on these huge moves, right? 1 to 12, you know, whatever you want to call it. If it would have been the whole electric, if we can see the future, we've got the 1 to 13. But you want to keep it simple at the same time. 1 to 5, 1 to 4 is more than enough, right? Same thing happens again. Bearish break. Now we've got this wick rejection here. So what we can do is let's bring in smaller time frames. Smaller time frames. Let's see what the 5 minute is saying. Price starts coming back up. Now, a lot of confusion normally comes as well, where I've seen, and when I do, you know, my students sometimes in the beginning when they join, they ask this question like, bullish engulfing, doesn't that mean I need to start taking buys, or does that mean no? Why? Because this was resistance. Let's change the color of this. We'll color it red. This bullish engulfing has no value in my eyes. Why? Because it's formed, you know, below the resistance. If a bearish candle forms, you know, let's say above support, again, a super strong bearish candle forms above support, no value, right? So here, so let's see what the 1 minute is saying, what the 1 minute is showing us. Perfect. Price comes up, a super strong bearish candle. Look at this, long wick rejection, no wick at the bottom. It's going to be a 100% candle strength. Super strong bearish candle here. You can take your sell after this candle, maybe, if you decided to, or you can wait for this bearish candle to, I mean, both bearish candles are super strong, or this bearish candle to break the low of this candle. You can just get in, right? So I mean, nice trade there as well. A nice 1 to 5 capture. That's 10%. That's your FTMO phase 1 passed in 1 day, right? Now obviously the way I show the break and retest, the way I've refined it, You know, it's not, this is not the exact method I trade. This method still has a little bit of holes. It's still a great way to trade the break and retest, but the way obviously I've been doing this for many years, and it's just the way I've refined it now. My entry method is super simple. The way I draw my zones is super simple, and I just capitalize on, you know, but yeah, by all means, this isn't a way to sell you the, you know, course or anything like that. No, by all means, do not buy it. So anyways, you have to yeah, okay, so let's move forward. So where could gold possibly go, you know, tomorrow or upcoming week? Let's break this down. Let's change the color back to white. And okay, so we're on, let's go on a small time frame. So I mean, right now we've got this little bit of a structure here, right? We've got a little bit of a structure here, and price now has broken through. Now, does this mean I need to start taking buys, right? Ideally, I would only focus on buys. Well, I can see these wicks here as well. Look at this. These wicks are starting to create higher lows, right? This wick is not breaking the low of this one. This wick is not breaking the low of this one. Let's actually draw this one. So look at this. This wick here is not breaking the low of this one. This wick here is not breaking the low of this one. And this wick is not breaking the low of this one. On top of that, we've got a bit of a bullish, mini bullish trend, right? So now what you can look for is, and you can see here, look at this continuation pattern, the bullish candle, super strong bullish candle above support as well, perfect. Volume starting to come, candle bodies are increasing in size, price starts coming in. So now what you can do, right? Let's just say this is London Open, right? I know Asian session is going to kick in first. This could just totally change throughout Asian session, but let's just say we're going to wait for volume, right? Price comes down. Let's just say, for example, price comes down into this area. You still wait for some kind of rejection, let it shoot up. Ideally, you still got the all this bearish volume against you, or you can just wait for price to actually come up, break through this level, and then shoot from there, right? And now, in my eyes, this wouldn't be an A+ setup, right? It wouldn't be, because I'm still technically fighting against all this bearish volume, which is not something I'm, you know, it's not my cup of tea, to say the least. It's not what I look for. Now, you can still take the buy, but my advice would be is, you know, minimize risk 100%, because we're still getting these wick rejections here, you know, and obviously buyers. Now, I'm just, again, this is just, let's just be assuming it's New York session or London session, right? Where this volume has already come in, and this is how the move forward should be. So just keeping it super simple for make it a little bit bigger. Just keeping it super simple now. Ideally, right, look at this. So we've got structure here, you know, we've got so ideally, how, you know, where would I personally would advise, or where you should, it's, so we got one level here of support, we've got one level here of support, right? Above this area, this line, and this line, well, above this zone here, let's just say price pushes further up, and then it starts testing this area, even, well, over here, I was going to just push this further up. Let's just do that right now, actually. Keep one there. Ideally, above this one. And yet, you may still lose the trade. Does not mean it's a 100% winner, right? Now, ideally, overall, you want to focus on, you know, trends that are bullish, right? Trends that where market is showing clear a trend, because the trend is your friend, like this famous saying goes. So what we'll do is, let me just mark, I'm quickly marking these. I'm not even going to refine these, just to give you, you know, a little bit of an idea. Let's mark some of these. Okay, let's grab another one, chuck it on here. Okay, so let's say, for example, we were down here now, right? Price, you know, look at this, breaks all these highs here, closes above, super, you know, got a lot of bullish pressure here. I mean, you can see as well, we'll color it in the zone actually, right? All this area structure is broken, price pushes it. I mean, we've broken these highs as well. So right, it's clear what price is trying to do now. Price breaks above, comes down to retest. Let's go on the smaller time frame. Let's go on a smaller time frame, and 30-minute, 15-minute, because price is always going to give clues. Price loves to leave clues. Just going to a small time frame. So you can either wait for a certain candlestick pattern, bullish, morning star, engulfing, whatever you want to call it. I was supposed to say engulfing. I think I said bullish. Super strong long wick rejection here. Let's change the color of this to yellow. Super strong bullish candle there, long wick rejection. Super strong engulfing pattern over here. Let's change the color of this one, of the engulfing one, compared to the previous bearish. Another long wick rejection. I mean, that's by long engulfing pattern, but that's a bit too far for my liking. You can just enter off this one even. Again, below the zone is ideally better. 200 points is tight anyway for, you know, gold. And, you know, you just keep it super simple, right? But in this case, you can get a 1 to 5 if you was to hold the full position. It's going to bigger. I mean, let's see. Because look at this, right? Market doesn't do nothing for no reason. Well, it doesn't do anything for no reason, right? Whatever it does, it has a reason behind it. Now, whatever that reason may be, it could be fundamental, whatever it is, just correcting itself, liquidity grabs, whatever you want to name it, right? Price does things for a reason. If it's come all the way up here, the way I like to keep things trading super simple, if it's come all the way up here after breaking all these highs, it wants to go further up. Logic, you keep everything super simple, simple logic, right? So look at this. Almost comes back near to the entry point, but even a 1 to 5, beautiful, perfect, right? But let's just say you held that. Well, obviously you can see where that's gone. But let's just keep, okay, let's just say 1 to 5. You take that out, right? Now it's like, okay, let's look for my next position. Am I going to look for a sell just because it come down here? No. It's not broken this, you know, major. Now this in my eyes would be the major zone. Because this was a key area of highs, which has now been broken. So for me to start focusing on sells again, it has to break this, you know, in my eyes would be the major zone. But it hasn't. It's respected it and gone further up. Not only that, it's gone further up and broke these highs now, right? Now price breaks, you know, breaks this, goes up and comes back down. Now, it's like, okay, if prices come back, it's going to retest this area. Well, first of all, obviously there's no, there's no rejection, there's no retest. Price comes back down here though and starts retesting this zone that we drew earlier as well, right? If I just zoom out, see, this is where people might have this supply and demand level. Oh yeah, this is where price tanked from, and you know, whether it's a zone, whether, you know, tomorrow, wherever you want to look at it, it's a zone. Price comes into this area. Let's go back to the smaller time frame, and beautiful. I can already see a bullish Morningstar candle here, another one here, but we want a super clean entry. And there you have it again, a super strong long wick rejection bullish candle. You can take your pretty much entry from here. A little bit of a bullish engulfing, but price now has come back. This is the retest, right? This is the retest area. Price, you know, just broken above again of this zone, coming back to retest maybe one more, well, obviously in this case one more time. Another long wick rejection bullish candle here. Ideally this is more than enough. Just take your bullish candle buy trade from here, and stop loss is a little bit bigger. Now ideally, look at this, a little bit bigger stop loss. Why? And it's more safer as well, below the wick and below the zone. Now ideally, if you were just sticking to the, and now I personally have a fixed stop loss, so let's just say even if it was down here again, you should be out here anyway, right? 1 to 5. But if it continues going 1 to 11, but if you're down here now, you can just pop down to a small time frame. Let's trail this, right? Let's look at any previous, you know, for my liking that's a bit too far back. Price now, look at this, is struggling. Oh, just one moment. Let's keep it super simple, right? Let's okay, highs over here. Price fails to break these. Zone a little bit over here. I'm just gonna trail this, right? Price just now have my stops below this area. Price pushes further up. I've already shown in many videos how to draw these support and resistance zones. Got another one over here. What am I gonna do from here now? Follow it along, right? Every time, so first we're here, price shoots up. You know, if it comes back down here, I'm already in a lot of profit. Price comes down to this area, I'm trading my stop loss, nice TP, you know. And if price shoots up, Now I'm gonna just move my stop loss. Let's keep it like this. It may much easier to understand. Stops down here. Price keeps pushing further up. Just gonna keep following like this. I can draw another one over here. Right, price pushes for it just keeps on going. Stops below down here, and maybe here I would get taken out. Absolutely fine, right? Because I've already, I mean, by now, up to now, how much would we have taken? How much would we have taken? So let's just say eventually it was that, right? Sort this out. So what was it, about 200 points? And just below there, I mean, where did I start from? Down here. And we did it all the way up to there. I want to 10 risk reward. FTMO phase 1 passed easy. Passed easy in one trade as well. Super simple. But if you're looking for a more refined version where you can fully maximize and have the high win rate with this method as well, link will be in the description. Message me one-to-one from mentorship for myself, and just gonna start bringing group calls back in as well, and they're just being currently on hold. And if not, even super simple, it's all there, right? Link will be in the description. Yeah, I mean, take care, and I'm out.